Good morning, traders. It's 8:12 a.m. This is a live trade recap. I actually did take two trades in the pre-market this morning. I came back in and just took a look at things just to kind of give it one more chance because I did try to trade earlier and there was no volume. And pulled up the list and these three were at the top and Eyeg looked the best out of the three. So I took a trade. And the pattern itself was really good, but the overall price action of what was going on in the pre-market wasn't the best. So I did go into it kind of knowing that I was taking a little bit more risk, but I still tried to hold till 2R and stop out at 1R. And let's see what happens. So I got all those stocks on my watch list and I went through them, and then the only one that looked promising was Eyeg, and it was mostly because, well, first of all, that it had kind of just started moving up in the pre-market maybe an hour before, and I really liked this ABCD pattern. So here's A, here's B, here's C, and generally what I like to do is I like to try to enter on the first pullback. Some traders will argue that, you know, there's a better chance of the stock running after the second pullback. And, you know, I don't really know, you know, I haven't collected enough data to prove that. I'm actually tracking when I take ABCD patterns, whether it's the first or second pullback. So after some time, I'll be able to actually have real numbers on that, because I think, you know, it's a little different with the low float stocks. Maybe we'll see. But anyway, this was almost an ideal ABCD pattern. And the thing about trading is almost isn't really good enough, because even when things are just right, when things are perfect, they can still go wrong. You could still lose. So you should really just wait for the perfect setup. And let me show you the trade, and then I'll show you what I mean by why it wasn't perfect. Because this pattern itself is pretty near perfect, but there's something else that makes this trade less than perfect, and I'll explain that. And it's really important, so try to stick around. So here was the idea, is that to get in on the second pullback. And now this was already a pretty aggressive entry, because this was, you know, I just thought maybe this is one of those times, because this does happen quite frequently, where these stocks that are running up really strong, and you see all this volume here on these two volume bars. So that shows like, okay, people just found this thing out and they're coming in and buying it up like crazy. So it gave us one little pullback here, and I thought this might be it. So let me try one entry where I buy for the break of this level, this candle right here, and I set my stop right here where you see the dotted line. So that was what I did, and my ideal entry would have actually been 685. So I caught some slippage there, but you know, I was okay with that, because, you know, when these stocks run really strong, you are going to get some slippage. So sometimes that's a good thing, because it just kind of confirms the strength of the stock. So let's fast forward a little bit. I think this one took a few minutes to play out. I was just marking out my stop there. I already have my sell order at 2R to sell for to sell 90% of my shares. And I based it off of my ideal entry, not my actual entry. So, which was 685 was my ideal entry. So if I did my math right, that should be 30 cents higher than 685. So, okay, yeah, so right there was right like bouncing off my stop. So I go ahead and cancel that order, because now I'm getting ready to stop out. No holding and hoping. That is not a strategy. That's a recipe for big losses. So there we go. I get my stop gets hit. I get stopped out. I take a little slippage on it. I think I wanted to get out at 669 or 668 or something like that, and I got out at 666. But I traded my plan, so you know, saved myself from a larger loss. Then, so then I start to kind of reevaluate this pattern, and a couple things I'm seeing right now that I don't like, that that I didn't notice initially when I first kind of re-entered is, this is a really big engulfing red candle here, which is a real sign of weakness. Pullbacks are good. It's good to get in on pullbacks, but generally they'll be smaller red candles, at least relative to the green candles. And I didn't really notice, I just looked at this as an overall, okay, this is a pullback, an ABCD pattern, and here's the next pullback. There's a support area here. There's a support area here as well. So you could consider that a support range. And that's what I was looking at when I was trading it, but I didn't really notice how huge this candle was at the time. I was just kind of focused on the overall pattern. And that's what happens when you're in the middle of trades too, is you kind of you see it. Sometimes it's just you seeing what you want to see, really. You kind of talking yourself into trades, and that's real trading. After the fact, you go, wait a minute, that wasn't such a great trade. Okay, so now, so this is the same idea. Like after a pullback, buy for the break of a 1 minute candle. So I do. And there were some other things even in the middle of the trade that I realized I don't really like about this thing, and gave me a little bit of an uneasy feeling getting into it, because generally I like to enter after the stock has made higher lows, right? And I guess one thing I could have done, and it probably would have worked out and it would have been a little less aggressive, is I could have made my stop the bottom of the candle that I entered on. But of course, that would have been a smaller win as well. So, and I have so much data telling me, this 2R thing is very strong. But again, those are for the best setups. This is like the second best setup, and I'll tell you why too as this thing plays out. But basically right now I got in exactly where I wanted to, 670, and now my my 1R is at the bottom of this candle. That's where my stop is. So I set my 2R sell order, which is 714, and then this thing takes a while to play out. And then I also notice I'm right around the 8 o'clock mark, which I don't like to be. But I was also hoping that maybe that whip that comes around at 8 o'clock might, hit my limit order. But, that's kind of like trading off of luck, which that's also not a strategy. So let's see. Yeah, so the thing starts to build some strength. It's looking promising. It's got a lot of distance between where the price is and my stop. So I'm feeling overall, like, okay, this might work. There comes the 8 o'clock whip. And then, I figure this might be my chance, to get out, and with close to 2R. So I pull my limit order down, hoping to get filled on that whip, and it doesn't work. I think generally that's not going to work, because this moves so fast that you're never going to get filled, or it moves with such slippage that your order won't fill properly anyway. I don't know. Because you see, like, for example, I have the sell 90 minus 2 cents. So that's the most slippage that order will allow. So that might be why it didn't get filled. I'm not 100% sure on that. And then you see what happened after the thing just got weak. There was that candle, and actually hit all the way to 715 and still didn't fill. So, I just think those 8 o'clock candles aren't any good for, trying to get in and out of trades. The only place orders got filled was probably right around this area. So yeah, now it's coming back down to my stop, so I'm getting ready to sell out. So this is the only good thing that I did, and this is what, I guess what I'm trying to share here is that, when you're in these less than perfect setups, you need to honor your stop all the time, period. But especially when you're in these less than perfect setups, because they're just that much more likely to go against you. So, you just don't want to hold on to them. So here it comes. I already canceled that order, and then there goes my order. So I think I wanted to get out there at 649 or 48, something like that, and I got some slippage. 643. So that stinks a little bit, but it's a good thing I sold because I mean I think this thing did curl around a little bit, and it may take off to new highs, but where I got in was overall early, and I'll show you why. I'll show you what I'm talking about when I said this was less than perfect setup. Yeah, see, now it's making its way to new highs, which I should have waited for that before I entered. This is my fault. This is not the stock's fault or like manipulation or whatever, people like to blame when they lose trades. So here's why this was not a perfect setup, is because this thing made some extreme highs a little bit earlier, like around 7 a.m., and went all the way to 727, and then it sold off, right? It sold off really hard too. So that, like, this in and of itself tells you the stock is weak. All right, it was strong back here, but then now it's weak. So all of this is backside trading, which I don't do, but I did. So because of this ABCD pattern enticed me, and I knew, that this thing was weak at this moment, and that this was backside, and I still took it anyway. And yeah, there it goes. Now it's breaking up through highs, but I've already taken 2 trades in the pre-market, and that's my rule, is not to trade it again. But the next entry, we can watch, by the time I'm done explaining this, it'll probably play out. The next entry would be after a pullback from the break through the highs. So yeah, so like I said, this thing established these new highs. So here it's nowhere, it needs to get up through it. Let's say this was an ABCD pattern where A was here and B was here and C was here. Then that would have been a really good entry. But this is backside trading, and these patterns that are strong, they're not as strong when they're in the backside. It's simple as that. So, you can't expect them to work. And the only reason I did this is not an excuse, is because I did see that not just that this pattern was so nice, but that it did make 2R a couple of times. Like if you entered for the break of this candle here, which would be kind of the first turnaround, which I wouldn't take that trade, but it made 2R easily there. And then here's the ABCD pattern right here, A, B, C. And then if you enter for the break of this candle right here, then this thing easily went 2R somewhere around there, and then it also went further. So it was able to manage some good 2R trades. So that was another reason why I decided to take it. But I don't think you should be making compromises in your setups. So yeah, I mean, I just prefer these extreme levels to play off of, and because they're just that much stronger. So I think that's what I'm going to stick to. I gave back a couple bucks this morning, 286. So I was over 515, 515.30, I think. So that's on me. And now I got to crawl my way back from that loss just because I took a less than perfect setup. If I took a perfect setup and it failed, then I don't really mind it so much, because hey, I did everything right. And it just went against me that time, And here I didn't do everything right. I did a lot of stuff right, but that doesn't matter. If you don't do everything right, you're not going to be a successful trader in the long run. So wanted to share that with you guys because, I don't know, sometimes on Mondays I feel a little bit aggressive, especially, I've been in the green the last couple of weeks, like 2 green weeks in a row, and I'm in the green overall in the month. So I was feeling a little bit aggressive, and that's not a good thing. You should always just trade the same way, every day, no matter where you are, green or red. Just because you had a couple of green weeks doesn't mean now you're a better trader, or, you're going to be lucky or something like that. It doesn't change. It's just like flipping a coin. You could flip a coin 10 times. The first 9 times, it could be heads. And then the 10th time, it's no more likely to be tails than it is heads again. You always have a 50-50 chance at flipping a coin. So the same is true once you've established your trading strategy and your rules, and you always play them the same way, that means that the odds are always the same. No matter how many trades you've taken, you can have, let's say the way you set up your strategy and your plan, it gives you 50% chance, because that's kind of what we're going for here, is giving ourselves a 50% chance of winning. And that way the 2R thing kind of works out in your favor to where you're winning more money than you're losing. So it's exactly like the coin toss analogy. So anytime you do anything that takes some of that 50% chance away from you, you're really putting yourself at risk for losses. So these losses are totally my fault. They're not the failed patterns. It's all on me. All right, guys. So yeah, just the last thing I want to say is, we all need to be the our own worst critic, I guess, of our trades, because no one else is going to do it. So you don't want to pat yourself on the back. Well, oh, that was kind of good. And I mean, like I said, if it's not perfect, if there's one thing wrong with it, especially if you were aware of it, like I was here, then it's all your fault. You need to just own up to it, so that going forward, you don't put yourself back in that position. Simple as that. All right, guys, I'll see you at the market open. We'll see if there's anything good to trade, and I'll record it either way. Take care.